Hello, good morning, everybody. Good morning to everyone in the house. If you can hear me clearly and can see my screen, kindly type in hi in the comment section. All right, thank you very much, Carrie. Hello, Scott Benji 067. Very well. Bonjour 746. WAC 2307. Good morning to you. 685. Thank you. 876. Hello. Good morning, everyone. Are we glad to be around? Are we excited to be getting prepared for the New York session? 183. Hello. All right. All right. So, once again, I want to welcome you all to yet another wonderful session of Extreme Speed Life, hosted by my humble self, Sheriff Daramola. As usual, I shall be taking you on a trading journey where we shall be evaluating the financial market using price action. We identify trend continuation patterns, reversal patterns, and we shall be using these parameters to identify trading opportunities lining up for us during the New York session. And the first thing we'll be doing is to be reviewing the pairs we talked about yesterday. We actually had some pairs we are working on since Monday, and we have been monitoring this pair for the past 48 to 72 hours now. And the first thing we're doing this morning is to review these pairs and check how well they are doing, after which we'll be using whatever information we have at this point to determine what next to do on this pair. Are we going to be trading them? Are we still going to hold on to them, or are we going to let them pass? And in addition to that, if you have any commodity or pair you want us to look at, feel free to drop it in the comment section, and I shall try as much as possible to squeeze it in to my schedule for today. So I think we are all clear on this. Without further ado, let's dive into the chart and let's see what is happening in the market. WAC 230 is saying Nasdaq. Okay, we shall look at Nasdaq. I'll try and squeeze that in to my schedule for today. So give me a moment. You're welcome, WAC 2307. Okay, now let's move into the chart and let's see what's happening. So as usual, the first pair we are going to be deliberating on today is the US oil as usual. And on the US oil, when I woke up this morning and look at the chart, the first thing I observed was that we have a very, very huge gap. And price actually has moved in the bearish momentum that we were expecting at a retest of that bearish trend line. And I'm very sure majority will have missed this opportunity, and even if you had placed a limit order, you might have a slippage in the order as price might not actually enter at the right point. it's only going to be profitable for those who actually entered when this price was going to the upside from here. So however, if we have missed this one at this point and we were expecting price to actually do this, let's quickly look at what we were expecting yesterday. So we were expecting price to either, we had two scenarios we were looking out for here on the US oil. The first scenario, we were around this area yesterday and we were expecting that we might see a significant breakdown, which actually happened, and we were looking forward to a retest of the key level to take advantage of that bearish momentum to the downside. And that was the first scenario we were looking at. And then we also had the other scenario where we were expecting price to go as far as testing that bearish trend line that has been holding price action in the last couple of weeks. We're expecting price to come into that area, do something like a reversal pattern that will push price to the downside from that area. And the third scenario we were looking out for was that we were expecting price to either break above this level, break above this level of that key level at $105, which also shares a confluence with the breakout of the bearish trend line, after which that will give us a bullish signal. Then a confirmation shall come in the form of a retest of either the key level or the resistant level of or the bearish trend line to take advantage of that bullish potential. However, none of this actually happened, as we missed this opportunity. We had a huge gap here. How many pips is that? From here to here, that's over 400 pips. And at this point in time, we have to be very patient to see how price is going to play out at this point. So for me personally, we already have a breakdown of this trend line now, this bullish trend line. We have a breakdown of that bullish trend line, which also shares a confluence with our key level at $102. This key level has been serving us in the last 1 week. Since last week, we've been using this key level. So we already have a breakdown of this key level at this point. So what do we want to be doing going into the New York session? Well, for me at this point, what I'll be advising is that if there is a likelihood that price would come back into this key level at $102, or probably go as far as retesting that bullish trend line or the bearish trend line identified here on the 1 hour time frame, then we will be looking for a reversal pattern from this area to push price to the downside from there. So we want to be hopeful on this one. We want to see how price action is going to play out during the New York session, as we want to see a retest of that key level at $102. The retest could actually happen. You can see if we look at the structure we're having at this point, we have a confluence right around this area, which appears to be an area where if price comes into either the key level, the bullish trend line, or the bearish trend line, we look out for patterns that support that move to the downside from that area. So this is what we want to be looking out for on the US oil. So what this simply means is that we really need to be very patient on this one. However, the other scenario we want to be looking out for at this point, considering the key level sitting at $97 mark area, and if we look at this key level appears to be the neckline of a reversal pattern that we saw during last week trading session. We saw this move to the downside from here. We saw this bearish momentum. We saw the left shoulder. We saw the head, and we saw what looks like the right shoulder at this point. Then we saw a breakout of structure, retest of structure to push price to the upside from here. So what's going to be happening if price comes back into the neckline of that reversal pattern, which is the key level at $97 mark? If that happens, then we want to see how price action is going to play around that region. So this region too at this point is a very significant level. This region I just identified here at $97 mark is a very significant level, as if we see price come into that area at any point in time during the New York session, we need to be very patient to see how price is going to play out at that point, as we want to look at for the structure price is going to be giving us at that area. So what we want to be doing is this: if price in any way comes into this area, that is, if we didn't see price go into the key level, that's $102 area, and we see price come down into the $97 mark, what we want to be looking out for is either one, the first one is if we see a reversal pattern, it could be a double bottom structure, it could be an inverse head and shoulder pattern, or whatever reversal pattern that you can think of that appears at this point. Then we want to be looking forward to taking advantage of a bullish momentum right at a breakout of structure with a take profit target aiming at least at a minimum of a $102 mark. So at this point, it's very difficult for me to project an entry point because our entry at this point is subjective, is subject to the kind of pattern we are going to be seeing at around the $97 mark if price actually comes into that area during the New York session. That is the first scenario we want to be looking out for. That's the bullish potential, after which we see a reversal pattern around the $97 mark. Then the other scenario is if we see a breakdown of that neckline, that is the of that $97 mark. Remember, we don't get too excited at the sight of a signal, as we want to wait for confirmation in the form of a retest of structure, where we look out for reversal patterns on lower time frame to join the decline to the downside from here. So if we are joining a decline at the confirmation of a reversal pattern on a lower time frame right below the key level here at $97 mark, we want to be having our take profit target sitting at least at around the $90 mark maximum. As if we look left, we can see that we have a potential bullish area. We can see in the past, on the 14th of July, we had a bullish potential that moved price from to the upside from here. So there is a possibility that if price comes back into this area, we could have a sharp rejection that could push price to the upside from this point. So these are the scenarios I'm looking out for here on the US oil. Let's quickly do a quick recap on what I'm explaining here. The first scenario I said is that we want to be patient enough to wait for price to come back to do a retest of the key level at $102. I made mention of how we have missed that gap. We had a very huge gap here and over 400 pips gap. And one thing we all understand from a technical perspective is that if we have a breakout of structure, we expect price to come back to do a retest of that structure to push price in the prior leading price action. So if we see a breakout like this, which has already happened, we've seen a breakdown, then we want to wait for price to come back to do a retest of either the key level or the resistance point here before we see that move to the downside. And if that actually happens, that is, we see a retest of the key level at $102 mark, then definitely our take profit target shouldn't be beyond the $95 mark on this one. So this is the scenario we want to be looking out for on the US oil as we head into the New York session. I hope my explanation was quite clear and precise. However, if you need further clarifications or you need me to shed more light on some certain aspects of what I just discussed so far, feel free to drop a comment in the comment section, and I shall be taking the next 10 to 15 seconds to look at what's happening in the comment section. I'm finding it difficult to load my comment section at this point. I'm trying to read what's happening. All right. Any questions whatsoever? 359, how are you? Good morning to you. I think I missed your Okay, you want us to do GBPUSD? Of course, we will treat GBPUSD. Remember, we did GBPUSD yesterday, so definitely we want to see how price action is playing out on the GBPUSD. So don't worry, it will be attended to. Moms, hello, how are you? Claiborne, good morning to you. How are you doing? 5199, good morning. I need an assistance on this Xtrain app. Someone will attend to you in a while, in a moment. All right, how to credit, someone will attend to you. Oh, Claiborne, you're welcome. Okay, 359. All right, in the absence of no questions, I want to assume that we all understand what I've just explained so far. So I will just advise that we be on standby to take advantage of whatever potential opportunity that comes up during the New York session. And always remember that we don't want to get too excited when we see a signal. We want to wait for our confirmations in the form of retest of structure before we join the potential momentum. So now we are going to be moving on to the UK oil as usual. And on the UK oil, what do we have? Definitely we are going to be having almost the same scenario on the UK oil, but on the UK oil, we don't have a gap as like the one we saw on the US oil. Now on the UK oil, what are we having here? What structure are we having at this point? Remember, during the course of yesterday's trading session, sorry, during the course of yesterday's live session, we identified this channel. We identified this channel where price was caught within a consolidation phase between the $106.50 mark and the $105 mark, and we saw our price was respecting this channel before we saw a little breakout of that structure, and then we were expecting that we see a breakdown of that support level of the channel with a retest of structure to join the decline, but that didn't happen as we saw price go as far as breaking out that area again one more time above this level, where we said if we see a retest of structure we want to join the rally to the upside, which never happened. But if you might have taken this retest of structure here, which is not bad, but you must have been stopped out by now on that one. So let's see what our expectations are going to be like going into the New York session at this point. After doing a quick review of our expectation yesterday, I would still want to make emphasis on this breakout of structure we experienced here during the early hours of this week. We saw this breakout of this descending channel, and one thing we all understand from a technical perspective is that if we see a breakout of structure, we expect price to come back to do a retest of that structure. And since we saw a breakout of the structure at this point, we'll probably be looking out for a reversal setup, which it could be a double top structure that could send price crashing to do a retest of that structure before we might be seeing that bullish move to the upside from here. Now that this has been this expectation has been identified, how do we take advantage? What advantage do we have during the New York session today? Well, the first thing I will be observing here is this. If we look at what has been happening since on the 14th of July this month, we noticed our price has been finding higher highs and higher lows. If we look at the structure, let me give you a visual representation of what I'm talking about here. We saw our price find a new high here. We saw a higher low, a new high, a higher low, a new high, a higher low, a new high here, a higher low at this point, and then a new high. Are we going to be seeing a new higher low at this point to push price to the upside from here? We don't know yet. But one thing for sure we want to be doing using the structure we have at this point is to connect the series of lower lows so that we can have a uniform trend line that we will be using to guide our action during the New York session. So if we bring out our line chart now, and the reason why I bring out my line chart is always to make sure that we can catch the most precise points in identifying that trend line. So bringing out the line chart here, and we run the connector series of higher lows at this point. This is what we are going to be having here, and this is also going to be a major parameter that will be guiding our action during the New York session. So let me do some readjustment at this point. So we have something like this. We can see our price has been respecting that bullish trend line. So that's a temporary bullish trend line for now. So we don't know how well that trend line is going to hold this bullish momentum as we head into the New York session. So with a key level, an important key level sitting at $104 mark at this point. So one thing we want to be looking out for is this: is price going to respect that bullish trend line? Remember what I used to say about trend lines. When price action is around trend lines, it's always very, very important that we exercise some patience to see how price is going to react to that trend line. Remember, if you look at this area now, price is right around that trend line, and we can see that we have something that looks like a consolidation phase around that trend line, giving us a clue into how the participants in the market are yet to make a decision. They are not sure of what is going to happen. Is price going to break down that trend line, or are we going to be having a trend continuation to the upside from here? So this is why we can see this consolidation phase that has presented itself in the last 1, 2, 3, 4, 5 hours at this point. So now we want to really catch this move when it happens. And how do we do that? Now we have two perspectives we want to be looking out for. The first perspective is the bullish momentum, which price might respect that bullish trend line and go to the upside from here. And the other scenario is price could break down that trend line, then do a retest to send price to the downside. So let us look at the bearish perspective first. After that, we'll now look at the bullish potential lining up here for us. So the first scenario is the bearish momentum. And what do we want to be saying if we want to take a bearish trade, a selling opportunity here? Well, the first thing we want to be seeing is a breakdown of that bearish trend, of that bullish trend line. We want to see that bullish trend line broken to the downside, giving us an insight into how the buyers can no longer hold that price, how the trend line can no longer hold the price. So when we see this breakdown in the form of probably an engulfing candle, which is most preferable at this point, considering the bullish momentum we've been experiencing since on the 14th of July. So we want to see an engulfing candle here on the 1 hour time frame to happen. That will give us that signal. And remember, we don't get too excited when we see a signal, as we want to wait for confirmation, which will always come in the form of a retest of structure that could, after which we look out for patterns on lower time frame that will support a trend continuation to the downside. So how can I make our job easier during the New York session so that we don't get caught up in any ambiguity? So what I want to be doing here is to identify a key level for our selling momentum. And how do we do that? If we bring out our line chart at this point, and we look left, we can see that we have this area which has been a demand zone. We can see this area has also been a demand level to push price up. We saw this area to demand, then this area became a resistance point, and it appears we're having a demand area at this point. So what I want to be doing here is to connect this area together, as you will agree with me that this area has been a major determinant of price action in the last how many hours is that? I think around 12 to 13 hours. So I want to connect the series together at this point. So what do we have? We have around 105.50 area, our 105.60 area as the key level to guide our action for any selling momentum here. So we have this. So what I want to be doing is to signify, make it job easier. One thing I used to advise my audience is that you might want to screenshot my screen so that you can use it for reference purposes when you're about making your own individual decision. So we are looking for a bearish signal here. So let's highlight this bearish signal in the form of a breakdown breakdown retest of structure. So we're looking forward to a breakdown retest of that structure to give us a signal that we are going bearish on this one. So if we see breakdown like this, we see price break down this level. I told you I'm expecting an engulfing candle. I want to see an engulfing candle because we are on the uptrend scenario here in the last how many days that is? I think 3 to 4 days now. And one thing I want to see, I want to see an engulfing candle take price strike through that level at 10. It's appropriate I label this level so that we don't get things mixed up. $105. Is it 50 or 60? Let's just put 50 here, and so $105.50. So I want to see an engulfing candle strike through this area. Then I wait for confirmation in the form of either a retest of this level, or there is a possibility that price could come as far as doing a retest of that bullish trend line, after which we look out for patterns on lower time frame to join the decline to the downside from here. And if we are taking a decline to the downside from here, I want our take profit target to not exceed the $100 mark, as this is also a very significant area. So let me give you our position side is what it's going to look like. So we want to be having our entry point right below the $105 mark, 105.50 mark. That is after our confirmation has been cited, and we have a stop loss right above the previous high, which will dovetail to about 100 pips thereabout, and then a take profit target of over 500 pips to catch, which appears to be a good deal if price moves in that direction. Now, the other scenario we want to be looking out for is price going to respect that bullish trend line? That is, are we going to see price respect this bullish trend line and push price to the upside from here? Now, considering the structure we have here, where price is around the bullish trend line, around the trend line, really want to look out for emphatic signals that price is actually going bullish at this point. So what I want us to be doing here is to scale down to a much lower time frame to see what structure has been formed around this area. I want to see what pattern has been formed within this area. So what I want to be doing is to scale down to, let's say, 15 minutes time frame to see how price action has been playing in the last in the last how many hours that is. I think 4 or 5 hours, I guess. So this is what we have here. We can see we witnessed this impulsive move to the downside from the 107.50 mark, and then we saw multiple rejection of the $105.50 mark. We saw the first rejection here. Price went as far as $106.66 area. Then price came back into this area. Are we going to see a rejection the second time? Are we going to see price move further up from this area? That we don't know at this point. So if we see this, then we might be having a reversal pattern in the form of a double bottom structure. And remember, a double bottom structure is not yet formed until we see a breakout of that structure. So what we want to be doing at this point is to identify a neckline that will be guiding our action during the New York session. So let's bring out our line chart here, and then hold on a second. So we have our line chart here, and then we want to identify a neckline. I hope we all understand that a neckline is a breakout of the neckline is always a confirmation that we have a reversal pattern forming. So if we have our neckline sitting at which area here, that is 106, let's say $106.50 level. So we have our neckline at $106.50. Let's place this right at the top. We can place it in the middle, in the center. Okay, great. So we have something good here. So for any bullish potential here, you all know what we're expecting. We should expect price to break out of the $106 mark, which also shares a confluence with that bullish trend line. You can see the bullish trend line. That means if price breaks above the neckline at $106 mark, we already have price right above that bullish trend line. Remember, we don't want to get too excited at the sight of a signal. We want to wait for confirmation. And if we see a significant breakout of that neckline, we want to look out for a retest of either the key level, the neckline, that is 106.50 cents. Price, in fact, price might even come as far as coming down into this area, but we just want to see a reversal pattern right around this neckline. It could even be a retest of the bullish trend line. Then we look out for patterns on your lower time frame. It could be your 5 minutes, 10 minutes, your 1 minute time frame, and then we join the appreciation to the upside from here. So if we're having an entry point right above the neckline here, and remember that is after our confirmation, we don't want to get too excited at the sight of a signal, which is the breakout of that neckline. We want to wait for confirmation in the form of a retest of the neckline before we join that rally. So if we see price, if we join right above that neckline, where will our take profit target be? Well, the first thing we want to be looking at is this. We have an impulsive move that started here at around $103.50 area during yesterday's New York session, which pushed price to the upside from here, and appears price has come to do a retracement into this area. And if we have a double bottom structure here, this confirms that the retracement has finally ended, and we could be seeing a bullish potential from here. So if that happens, we want to be extending this impulse leg into the future. We want to project it into the future, and we should be having, hold on a second, what's happening here? If we have this impulse leg here, we want to project it into the future from this point, and to have a specific figure, we should be using our Fibonacci extension tool, hereby running it through that impulse leg. Then we aim at an area between the 127.2 and the 1414 area as our take profit target for any bullish potential here on the UK oil. So that falls around $109 mark and the $108.50 mark. So this is what we are having here. TP targets for bullish potential here. So if we are taking a bullish momentum that is at the site of a breakout retest of the neckline we just identified here, then we want to be having our take profit target within the zone, which will dovetail to how many pips that is. That's around the 250 pips to catch, which is not a bad outcome if price plays out that way. So this is the scenario we are looking out for going into the New York session. I explained two scenarios for you. The first scenario is if we have a breakdown of that 105.50 cents area, which also shares a confluence with that bullish trend line, then we don't want to get too excited, as we want to wait for confirmations in the form of a retest of structure before we join the decline to the downside. And if we do have a break above that level, sorry, I didn't put this. If we have a break above the neckline here, we want to be having our take profit target within this area, which dovetails to a minimum of 280, 250 pips to catch here, with a stop loss of about 40 pips thereabout, which is not a bad scenario if price moves in that direction. So this is my perspective here on the UK oil. I hope I made myself very, very, very clear. And if you feel you need further clarification at one point in my discourse so far, feel free to drop a comment in the comment section, and I shall be taking the next 10 to 15 seconds to run through the charts to see if there are inquiries regarding what I have just explained so far. Are you sure? Are you sure you can hear me? Oh, I'm so sorry. Can you hear me now? Can you hear me now? Oh, I'm so sorry. So I have to take that again. I think I placed my mouthpiece on mute. So let me quickly do a recap of what I just explained so far. I told you how I'm expecting two scenarios here. I have two scenarios. I have expectation of two scenarios here on the GBPUSD. And one thing we observed here is that we have a bearish trend line which was broken 2 days ago, and we all understand that from a technical perspective, we once we have a breakout of structure, we normally look forward to a retest of that structure to join the rally to the upside. However, we noticed that since price moved into the 1.20350 area, we've been having multiple rejection of that level. We had the first rejection here. We had the first rejection here. Hold on a second. We had the first rejection here. We had the second, third rejection here. And we had the fourth and fifth rejection at this point, pronouncing that area to be a very strong supply niche for participants in the market. So because of this, now I was able to identify a neckline around this area, which I'll be serving as our key level to guide our action at around 1.2 area during the New York session. So what I said is this: what is my expectation for that bearish momentum to actually happen is that we want to see price do a breakdown of that level. And remember, I want an engulfing candle to happen here, where if we see a breakdown of that key level at 1.2 area, which appears to already be happening at this point in time, but mind you, don't get too carried away. This candle is still about 50 minutes old, and we still have about 10 minutes to close. We never can tell what can happen within the next 10 minutes. It could turn out to be an hammer candle later on. So what we want to do is to see that this candle close below that neckline, and we want to look forward to a retest of the structure to join the decline to the downside from here. So this is my scenario here, and our take profit target should be at the retest of this resistant level, sorry, of this bearish trend line, as we're expecting price to come and do a retest of that structure before we probably see a bullish potential from there. However, considering the long-term bearish momentum, considering the momentum we have here, we have a bullish momentum that has started on the 14th of July. I want us to not be too over ambitious, as we should be placing our first take profit target at around the 1.19 area. Well, let's see how price action reacts to this level. So if price action now breaks that level, then we want to be looking forward to a retest of structure to add more position to our entry. Then the other scenario I explained to you was the possibility of a bullish potential here, which I'm not sure is going to happen, but it's very appropriate that I made mention of this so that since I'm not going to be with you during the New York session, if this possibility happens, so that we know what to do when it happens. So what I'm saying here is this: we have a supply zone around this area. So one thing, if we are going to be taking a bullish potential here, is to wait for a significant breakout of that supply zone. That is, we see that the buyers take out all the selling opportunities, all the selling positions from that area to give us a signal that we want to be going bullish. However, we should remember we don't get too excited at the sight of a signal, as we want to wait for a retest of structure to give us further confirmation that we're actually going bullish. So what I want to be looking forward to is a breakout, retest of that structure. Then I look for patterns on lower time frame to join the rally to the upside. So I said our take profit target should be around the resistance point of and the temporary bearish trend line we identified on the 4 hours time frame, which is the black dotted line on your screen. So if we have our take profit target around that area, we will dovetail to about 110 pips thereabouts, as we never can tell what will happen within the zone, as there is a possibility that sellers could take over, respect that trend line one more time to push price to the downside from there. So these are my scenarios for the GBP USD. I hope I made myself very, very clear. If you, one way or the other, think you need further clarification, or you need something, you need me to shed more light on a particular area which I discussed so far, feel free to drop in the comment section. Okay. All right, Streamlabs, that's good. That's good. I always advise that my audience should take a screenshot so that whenever you find yourself in whatever scenario that comes up during the New York session, you not be caught up in a dilemma of not knowing what to do. So you can use that to make your own, you can use that as a reference point to make your own individual decision when the time is right. So that's good to hear, Streamroller. And okay, confirming the sound is good. Glad to hear that. Blood, hello. I'm new to this. Oh, Blood, you're welcome. Glad to have you around. Stay tuned with us and try as much as possible to join us every day, 11 a.m. West African time, as we all come here to look at the markets together and let's see what opportunities are lining up for us during the New York session. And if you also have pairs and commodities you feel we want us to look at, you can drop it in the comment section and I'll try as much as possible to do justice to it. So you're welcome, Blood. Good morning, Pep80. Glad to have you. 245. Oh, thanks very much for the confirmation that the sound is good. Wadia, USD. Okay. USD. All right. Good morning, Wadia. Glad to have you around. All right, all right. So let's move on to the next pair. I think I have like 7 more minutes left. Which pair should we do? Should we go to the Euro USD? I have Euro USD to share with you guys, or should we do Nasdaq as somebody raised Nasdaq earlier? Which one are we taking? Are we taking Nasdaq or are we taking Euro USD? US gas, XNG, gold. What is saying gold? Should we go for gold? You're welcome, Blood. Should we go for gold? Tech 100. Which one should we go for? Gold, Tech 100, US gas, XNG. Okay. Oh my goodness. All right. I think I'll just have to take one out of this. Streamline is saying gold. Um, gold is more of. I think gold is saying USD, Euro USD 359. I did GBPUSD for you. So let's have either Euro USD or Tech 100. Let's have gold or Tech 100. One of the two. Either of the two. Gold or Tech 100. Okay, let's go for gold. I'll run through gold quickly and I'll take Tech 100 after that. 685 is clamoring for Tech 100. I'll take Tech 100 after that. So let's look at gold quickly. On the gold, it's obvious that we've been on a bearish momentum on the gold for quite a long time. And let's go down, let's scale up a little bit to the daily time frame. Let's see what happened on the daily time frame. We have been on a very, very, very strong bearish momentum. And one thing we observed during the course of last week trading session was that we saw a final breakdown of that bullish trend line. We have that bullish trend line has been holding price action since the beginning of the year, was finally broken during the early days of this month. And one thing we all understand from a technical perspective is that when we see a breakout of structure, we are expecting price to come and do a retest of that structure to give us a confirmation that price actually going in that direction or not. So personally, what I'm looking out for at this point is if since price have already broken down that bullish trend line, I want to see price come back to do a retest of that bullish trend line to probably send price crashing to the downside, or we could have price break above that trend line, retest it to push price to the upside from here. So now, and you understand that is going to take like a month before that happens, before we see price come back into that bullish trend line, if it's going to happen. So one part of me is expecting a bullish momentum very soon, but we don't know when that bullish momentum is going to happen. So scaling down to a much lower time frame, the first time frame we want to go to, let's go to the 4 hours time frame. Let's look at what structure has been giving us in the last 2 weeks. If we look left, we can see that we have a scenario where price, after price has come into the demand zone at which area is that $1,697 mark, we have been saying that price has been finding higher highs and higher lows at this point, hereby caught up in a consolidation phase as well, giving us a clue into the indecision, which I also explained earlier. Like I said, I'm expecting that bullish momentum to do a retest of the bullish trend line we identified on the daily time frame, which we don't know when it is going to happen. So personally, on the XAUUSD, I'm expecting a bullish momentum, but we don't know when that bullish momentum is going to happen. So on the 4 hours time frame, we really don't have a structure to work with here on the 4 hours time frame. So I want to scale down to a much lower time frame, like the 1 hour time frame. So let's look at what's happening on the 1 hour time frame. On the 1 hour time frame, the first thing first we observe is that this is the first demand zone we found here, which happened during the course of last week trading session. We saw how price rejected that area, giving us a clue into a possible bullish trend that is unfolding around this juncture in the market. So one thing I want to be looking out for is to see, we are already, okay, hold on a second. We saw this double bottom structure, and then we expect price to do a breakout of that structure, do a retest of that structure to push price to the upside. But what we saw the breakout of that structure, and then price came back into that structure, and we also have another consolidation phase. So one thing I see here is this: I think the participants in the market are actually waiting for a catalyst that will push price either way. So what we want to be doing, first of all, let's look at the economic calendar. Is there any parameter that we are looking forward to between now and Friday that could push price? Well, we don't have any US major release between now and Friday, so I'm still expecting this consolidation phase might still take a longer phase. But let's go back and see what's happening. So one thing I want to do here is to identify the neckline of this double bottom structure we identify here. So if we bring out our line chart at this point and we look at where, okay, let's look at that. We see this area appears to be the neckline. We can see in the past, hold on a second, this area has been a demand zone, resistant level here, and we have a demand zone at this point. So for me at this point, this area at 1713 area appears to be the most significant area to place our neckline here. And if we are placing our neckline there, then we should be having that area as our key level to guide our action for any bullish momentum that we might be expecting. So we have our neckline sitting at 1713. I'm very sure most people will be expecting a selling momentum here, of course. So let's look at this. Let's be through with this first. So we have something like this here. So we have a key level around that $1,713 mark, which is also an area we want to be looking forward to a breakout of that structure to take advantage of a bullish momentum. Another thing I also observed here is this. If we look at the last rejection of this demand zone into the $1,723, $724 mark, that's a very strong impulse leg. And after every impulse leg, we expect a retracement phase into our golden zone area. If I bring out my Fibonacci retracement tool at this point and running through that impulse leg, what do we have? We have our retracement, we have our golden zone between the 50 and the 78.6% as an area where we'll be looking for buying opportunity. So if we are going to be looking for buy opportunity here, then this aligns with the neckline structure we identify as $17 mark. So if we are looking for a buy opportunity here, so definitely I want to see a breakout of this neckline. I want to see a breakout of this neckline one more time. Price does a retest of this neckline, after which I look out for patterns on lower time frame that supports a trend continuation to the upside. So where will our take profit target be? If we look left, we can see that we have a bearish trend line that has been respected since the beginning of this month. So I want our first take profit target to hold around that area. So we never can tell what will happen. So for me at this point, this area is more or less a very significant level, and whatever happens here will now determine if we are actually going the real bullish or not. So one thing I want to be looking out for is price to come back into this area as my take profit target, and if there is a possibility that price breaks out of that level, then we want to be looking forward to a retest of structure to join the rally to the upside from there. However, if a reversal pattern happens here, probably price does a retest of this trend line, then I want to be looking to take advantage of a selling opportunity that could send price crashing to the downside from there. So if I want to sell the gold right now, I'll probably wait for price to come into that bearish trend line, the dotted red line that you can see on your screen, before I take that selling momentum, as somewhere around here still looks very dicey. You might be thinking of selling around this point, but for me and my style of trading, I'll probably prefer price to go into that bearish trend line before I look out for any selling potential from this area. And the reason why that is because of this demand zone here. You can see this demand zone have been very strong. We saw our price has been rejecting that level multiple times before we saw that impulsive move to the upside, and since that time, look at since last week, and the last how many days that is, in the last 5 to 6 days now, price is yet to come back into that level. Throughout this week, price has been rejecting the $1,705 area, giving me a clue that we might be expecting price to move into this area, probably this level, before we see that bearish move. And if we have a breakout of structure, then good for us. We take advantage of a bullish momentum at a retest of that structure. So this is my view here on the XAUUSD. So let's see how price action plays out during the New York session, and we shall come here tomorrow and revisit what this is all about. So this is my scenario on the GBP on the XAUUSD. Are there any questions whatsoever? Will USDJPY hit 140? USDJPY. I actually shared. Let me do this. Let me quickly do this. I shared something on USDJPY a couple of days ago, and for me, I'm expecting a bearish momentum on the USDJPY. You'll be surprised to hear that I actually took some trades on USDJPY. We took a trade on Monday, and we took another trade on Tuesday as well, and both trades were actually profitable. Let me show you what my outlook on USDJPY is like. On the USDJPY, where's my USDJPY? Here. Let me show you what my outlook is like. Okay, here we go. So this is USDJPY. This was my first trade this week. I took this trade since last week. I took my profit here at 137. I took another trade here on, I think yesterday. Yes, yesterday we took another profit here at 84 pips again, and then I'm expecting price again to come. So I already have a pending order right here, and I have one right here as well. So I'm expecting price to break down, come down to break down here, retest to push price to the downside from here. And one thing I also observed on the USDJPY is that we have a very strong supply zone at around the 138.350 mark. We can see our price has been rejecting this level multiple times. Anytime price comes into this level, we see sharp rejection. We see the first rejection here, the second rejection, third rejection. Then we saw, look at what happened here in the last 24 hours. We can see how price has been rejecting that area, and that area appears to be a very strong selling niche, as we can see sharp rejection of that zone. So on the USDJPY, I'm expecting a bearish momentum to happen here, and I'm looking forward to at least the $137 mark as my take profit target here on this one. So for those who are very conscious traders, you might want to hold on and wait for a breakdown of this neckline I've identified here at $130 130 Japanese yen mark. If we see a breakdown of this level, a retest of structure should push price to the downside from here. So this is my scenario. I'm already profitable on the USDJPY. I took multiple trades here. You can see 1, 2, 3, 4, 5. 5 positions I took between Monday and yesterday, and they're all profitable. So if I take this one too, I'm just taking it for the sake of just seeing how price is going to play out during the week. So this is my scenario on the USDJPY. So on this note, I would like to do a quick recap of what I've shared so far. In fact, I'm already 7 minutes out of my time. Let's quickly do a recap of what we shared today. So on the US oil, the first pair we talked about, I told you we had 3 scenarios we are looking out for here on the US oil. The first scenario is price to come back to do a retest of either the key level or the retest of that bullish trend line or this bearish trend line, and look out for a trend continuation to the downside with a take profit target at around the key level at $97 mark. Then I also made mention that if we further see a breakdown of this key level, then a retest should give us further confirmation that we want to join a decline into this potential demand zone, which is around the $90 mark as a take profit target. Then all the scenario I also mentioned around the $97 mark is the possibility that we could be having a reversal pattern within this area that will push price up. So if you are a counter trend trader, you might want to take advantage of that move to the upside from here. Then we moved on to the UK oil, where I explained 3 scenarios. I did 2 scenarios too as well, and we're able to identify 2 parameters that I think 3 parameters that will be guiding our actions in the new week. The first parameter is this bullish trend line, which I explained to you shall be one of our major parameters. And then we have a key level at $105.50, which is our parameter for bearish momentum, and we also have a neckline at $106.50, a parameter for a bullish momentum. And how is this going to work? The first scenario is that we're expecting price to break down this bullish trend line, which also shares a confluence with that key level at $105 mark. And we don't want to get excited at the sight of a signal. We want to wait for price to come back to do a retest of either the key level, probably come back to do a retest of the bullish trend line before we join the decline to the downside. Then the other scenario we had here was that we expect price to break above the neckline. We were able to go down to the 15 minutes time frame to look out for reversal patterns, to look out for opportunities that we could take a bullish momentum on the UK oil, and we had a neckline sitting at $106.50, and we said we're expecting price to break above that neckline to give us a signal, then a retest of structure for confirmation to join a rally to the upside with a take profit target sitting at around the $109 mark, which will dovetail to about 280 pips. Then we moved on to talk about the GBPUSD, where I'm still expecting that bearish momentum to happen. We actually had a signal in the form of a breakdown of that neckline, which has already happened, and then we want to look forward to a retest of structure to join the decline to the downside. So we are looking for a retest of structure to join the decline to the downside. So I also made mention of how we should be wary of the key level at 1.19200. We should be using that area as our first take profit target, and if we do have a breakdown of that level retest, then we should be adding more position to our existing trade. Then I also made mention of another scenario where a possible scenario could happen at the breakout of the supply zone. A retest of it could push price to the upside with a take profit target sitting around the resistant level of the bearish trend line we identified here, which will dovetail to about 110 pips thereabout. So that's the scenario. Excuse me. So that's the scenario we're looking at for the GBPUSD. Then we went on to deliberate on the, I think, is it XAUUSD? That's the gold, where I'm expecting that bullish momentum to happen. And I told you I'm not comfortable taking any selling momentum here yet until I see price come to do a retest of this bearish trend line. Then I can take that move. And if I'm going to buy this one, I want to see a breakout of this neckline at 1713 level, a retest of structure before I join the rally to the upside from here. So another thing I just saw now is that I am able to connect the series of lower highs here to identify a temporary trend line which could also guide our actions. And one thing I found is this point. Let me make this a little bit thicker. Okay, so we have something like this. So if you okay, so I have something like this now that will guide our action going forward. So now if we have a significant breakdown of this level, then that will welcome a selling opportunity. If you have a breakdown retest with a reversal pattern here on the 1 hour time frame, not lower time frame. Remember, on the 1 hour time frame here, then I want to see a downtrend. The reason why I'm saying on the 1 hour time frame is because of the strong demand zone here that we saw in the past. So I want to see a reversal pattern here on the 1 hour time frame before I join the decline to the downside here. So I think that is what we shared today. I'm so sorry I will not be able to take the Nasdaq. I'm very sorry. 656. We should be looking at that tomorrow. And I hope I was a little bit precise in my explanation today so far. And one thing I will advise is that we should not always be too excited when we see a signal. We want to wait for a confirmation before we want to join the potential momentum that is unfolding before our eyes. This is one thing that is always the problem of most traders, getting too excited. So when we see a signal, we want to be patient enough to wait for the confirmation to happen before we join any 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 momentum that is unfolding. So on this note, I would like to call it a day. I wish you guys the best of luck. I really appreciate being with you guys. It was a wonderful moment with you guys, and I look forward to seeing you guys again tomorrow, same time, 11 a.m. West African time on Extreme Speed Live, as we hit the market again to look at the profits we've made. So thank you very much for being around. I wish you the best of today, and bye bye.